The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour, the 7th day of November. And I know that this weekend we have a certain Tom O'Brien having a birthday. Happy birthday, Tom. And also one of my family members. Happy birthday to the family member. And thank you for 3 wonderful hours here. Starting off, well, there was a replay, but then you got Tom O'Brien live with Daryl Martin, and that was really a fascinating program, talking about gold, what's expected, talking about the dollar, very intense discussion about the dollar. We'll go through that as well. And program right through until 6 o'clock this evening here at TFNN. So let's get to the numbers. It is almost impossible to believe that from the 15,855 low on October the 15th, there have been 17 sessions, and the Dow has had just that one IBM ugly session right there on the 22nd of October. Other than that, it's just been almost straight up with very little leeway between a peak and the next move up. Peak A was at 16,420. Oh, let me just explain. For those of you who are new, Technical Friday, yep, in the den, yeah, said. In the Chapman Wave methodology, the simplicity of the technique is to be able to identify from the lowest, most obvious low bar. I usually say the most identifiable low bar. This is the easiest way to do it. You merely count each successively higher peak, and if the construct is such that it's still very bullish, let me show you. If you're looking at Tiger TV, look at this beautiful right here. And I have so many charts, I can just pick any chart and talk to you for an hour at least on that chart. But this is 2 charts. And in fact, if I can just grab it, look at that. Isn't that beautiful? See that mirror image? Wow, that looks like something you'd see in Scientific American. Actually, these days you don't even see that in some of these magazines. They've all gone so, even Consumer Reports has gone so commercial. But they have to. You have to move with the times. But it's just fascinating. And they kind of get dumbed down, but that's the way it is. Certainly Scientific America dumbed down is still way beyond me, but that's okay. Look at this. A mirror image. What is that? That's the dog. Well, it ain't no dog. It is an inverted Eiffel Tower, uppercase A pattern, the DOG, which is the ProShares Trust Short Dow 30, and it has the opposite pattern to the DIA, which is the diamonds, diamonds. It's a SPDR Dow Jones Industrial ETF. Well, I like to use all sorts of things as tools. My Sears and Roebuck. Wow, talk about Sears and Roebuck. Huge move up today. And they always do this. This is why I never short Sears. I was told, must have been 4 or 5 years ago by someone who really knows the ins and outs, knows all these guys by name, knows them personally. He said, don't short Sears. He says, these guys have a lock on the market. They are on their stock. They have only a small portion outstanding, and they're able to just buy it in whenever they feel it's getting too low. And they have this huge real estate stuff. Well, now there's a talk about them starting a real estate ETF, and that's fascinating. Why? I just got an email from Bob to say, sold 1/3 of my Sears, January S&P 45 calls it triple. Now playing with the house's money. Hey, congratulations, Bob. I don't know how you did that. That is fabulous. Whatever technique you used, bravo. That is really terrific. So let me go back here. I've got a ton of questions that I've got. I'll try to answer them. Well, let me get right back to the stock chart, which is the Dow Daily, which I show my subscribers to my opening call. And yes, I'm still bullish. I'm still looking at the upside. We're still only in long positions. We did get stopped out of a position we got into yesterday. We've had fabulous success. It was up very nicely. I made it that we made some money, not very much. Why? Because one of the stocks, Salix Pharmaceuticals, there's some question, some legal aspect, so it got smacked down, and then that affected the IBB, the Nasdaq biotechs. I think the biotechs are getting very close to a pretty decent consolidation to the downside. Meantime, back at the ranch, 17th session of the Dow moving to the upside. The S&P, the Dow's up, no, the Dow's now down 12 at 17,541. It has made a new recovery high by a couple of points, so this makes it the 17th day. It could turn into an ugly candle by the end of the day. That would only be the second ugly candle, but wait a minute. Look at this chart here. This is the E-mini. There is just one tiny little red candle on the 22nd, the same day, because IBM did influence a number of the stock sectors, and it had a horrible day that was down 14 or something. But look at this. SPY. This is the trading vehicle of the, this is the ETF, the SPIDER, for the S&P. And look, it made a new high that day. It didn't make it. It made it a little later on. And now all three, the Dow, the diamonds, and the S&P and the SPY are in leg C up. The E-mini, now this is going to be absolutely fascinating. They usually resolve themselves to Ds because the others will go to an E or an F. But look at this. This is only in leg B to the upside. So my suspicion is that the E-mini will resolve itself maybe Monday where it pulls back. Maybe the other indices just make a slightly higher high, and they all get into leg C at some point. But anyway, as I'm looking at it right now, 120-minute chart gave a signal that it's in leg D. You could have a pullback digestive moment here in the E-minis. Let me run the numbers because there are so many questions to answer. I'd like to get to them because they seem to be quite pertinent. Everything from the EEM to the Russell. Let's go. The Dow's down 9 at 17,544. The S&P is unch at 2,031. The comp index is down 15 at 4622. Gold is having a really nice day, up 22. And what I discussed, I'll do this together. I suppose in my opening call I should have grabbed some gold stocks. I'm not even sure why I didn't yesterday or today. There was just so much talk about gold turning around. I thought maybe I'd have another chance. It doesn't matter. If it does turn around, it'll be a nice pop-up. Why? Because we haven't got it yet. I'm going to be saying something that might be a little unusual here. Because the stochastic's at 92% and flat, it is the equivalent of, look at this. I'll just go to the continuous contract. It is the equivalent of, no, let's go to this. Yeah, it is the equivalent of say the GDX, which is the market vectors gold miners, having a nice move up 5.5% at 18.19, but being flat. Remember down there it was flat in the single digits. It went to the single digits. Now it's up at 11% until the GDX, the GLD. There are 5% in the GLD. I think this is just a pop-up. And I wouldn't be surprised if there's another series of arch formations being made here. But certainly as a trade, to get a nice percentage gain on those stocks that are down in the 1s and 2s and 3s, this is a perfect time for it. So, yep, in the Den, Peaky says, Basil, gold, dead cat bounce, suckers rally, or real deal with months of gains. I don't think it's months of gains. I mean, I hate to say it because this is just a horrible, horrible thing to say, but I had mentioned, a year ago or something, more than a year ago, that I would not be surprised if this move down in gold will see that all those little stores that opened up that said buy and sell gold, when I see the to rent for let or to rent sign, to rent sign, on the front door, I don't think I'll get a major buy in gold. That was a huge move up from, what was it, 2000? I don't remember. I know that the XAU was at 40. XAU was at 44, and I got a major buy signal. That's all I remember. So That's my thinking. I could be wrong. This is the most difficult thing when you're in a real bear market in monthly charts, how you constantly keep thinking that this is it now for whatever it is you're following. And it just doesn't happen because that monthly chart is way more powerful with the tide. Look at the tide of the GC contract. Look at that. Yep. You remember on I don't even know if it was yesterday or the day before. I don't see how this could be the end for gold when the continuous contract hasn't gone towards the 1,086 level, towards this candle here for left side, right side. Now, this is the month that it should be. This is exactly the month. So this is a very important month. But we'll see. I'm suspecting we've just got another. It's extending to the right, and it's just another bounce. 1293 is the 9-period moving average in gold and the continuous contract. And then I think we start to come down. Look at the dollar. The dollar is breaking out above the 200-period exponential moving average. That is really important. So I'm going to continue. Just quickly do these. I've got callers online. So let me just get to close that. I'll talk a little later about it. I just so many questions that need to be discussed here. So let me go to. We've got bonds are up to. Now this is really interesting. We got one of our dinners made a fabulous call on the TLT, looking very good right now. So Oda was looking for higher prices, and we're looking at the TLT, which is almost in its own orbit, because you've got to think of the TLT as one aspect, which is basically like Fed-related, right? Dollar, Fed-related as well. Dollar's lost control of whack-a-mole knocking down the dollar. So the Fed is controlling the bonds, the yields. Fed is controlling the dollar, but they've lost. Either that or they've decided to let go. Now they feel it's a little more. A good way of playing this is to allow the dollar to move higher. And let's see how the multinationals do. And then as they do that, it's amazing. You know, I have a good friend from back in high school. Now, it's not that he's smart. Yes, he's really smart. But he's got a kind of a golden touch. Things that he touches most of the time, all the time, but a lot of the time, just work out beautifully. It doesn't just work out beautifully. Confluence comes together to help him because his time just seems to be right as everything comes together. It isn't just that. It's that the move that he makes, the considerations that he takes in, allows for positive events to even help him. He doesn't have to have it, but it helps him. Almost all his life, except for one particular aspect, which he has no control over. Now, all of a sudden, you've got the dollar moving up, which should hurt the multinationals. But no, wait a minute. Somebody else is the floodgates to open with money. And who's that? Abe, over in Japan. And he says, we're going to buy not just our stocks, but international stocks. What does he mean by international stocks? Does he mean Russian stocks? Does he mean Swedish stocks? No! American stocks. So we've got that. We're going to come back with Lou Nashua, and we'll talk a little bit more about the details that I've got. Thought questions from my email list. I'll be right back. I'll talk to you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back in the Dow's up for S&P. Unbelievable. This is just like that Energizer Bunny and just keeps moving higher. It's one of the reasons why I wanted to stay as long as possible on the long side. And, my eyes pop right out when I see this stuff. It's amazing. So we've got Lou in Nashua. Hi, Lou. How are you?
Very good. How are you?
I'm well, thank you. Could you just remind me, you wanted to look at the soybeans, the January contract. What letter is that?
I'm not sure.
So someone in the den maybe can tell me what contract is January. I should know January contract. A, B, C, D, E, F. I thought it was an F, but it isn't. F15. All right, I'm going to do this based on my continuous contract. In any case, someone will. There, it is F. So, that's because Z. So I put a Z. It's in. Of course, I've got it right here. There you go. All right. That's why I wanted to get it, because I wanted to see if there was, in fact. Now, I've got this as a peak C in the Chapman wave, and it's very similar to a lot of the charts that I'm looking at that have gone very nicely up to C, but some of them have pulled back a little more than they should, and that's making me a little bit more cautious than I would have been if they hadn't done that. Now, let me explain what I'm looking at. You do not have anything right now, is that correct?
No, I don't.
Okay. If that's the case, then let me start off fresh. The soybean contract, I'm going to go back to the continuous contract, and I wanted to just show something here. In the very long term, this constantly has made peak Ds and peak Es and then had a pretty good pullback. But it's all been within a rising higher highs and higher lows context. The last high wasn't that much higher than the previous high, and it's made a slightly lower low than the trend line support. So I'm suspecting that right now on a short-term basis, even if there could be a little bit of a pop-up to a new recovery high to make that leg D in the daily contract, the weekly contract is really very important because it's got support at the 1,500. I guess that's $10. I'm not sure how they call it. So I'm going to make the suggestion that I don't, how can I put this? Because you're looking at January, I think we've got a little bit of time. I believe that I need to wait for about a week to see what happens. I'll explain why. It doesn't even have to be a week. I have to see whether or not there's enough strength to climb above the 1029 level that was made on the 30th of October. And if it does that, then what I would say to you is that on any serious pullback afterwards, based on the weekly chart, I'm going to advise you to get a position. Now, I know you like to trade one contract at a time. If you were getting two contracts, it will make it a lot easier. I would say to you, start your one contract right now, but I don't know what the...
I was thinking of going short.
Let me just finish my thought. The one contract would be to go along right now, but I would have a fairly tight stop, and that stop would be underneath yesterday's low of... Now, let me just see the relationship. 1027, and if I go to SF15, 1027, okay, they're very close. The price of the contract together with the price of my continuous contract are really close. So now I'm going to go to the contract, and I'll give you the numbers. If you were long, and by Monday or Tuesday it dropped below 111.5, let's call it 110.5, I would say I don't want any part of it, because you could make that pattern that I call the H pattern and then come back and at least retest the low of the day before, which is way down at 995. So I suppose I could say to you this is the exact opposite if you wanted to go short, because if you wanted to go short, if it went 1 penny above yesterday's high of 1040.5, I would want out, because it would say to me, no, my bias right now is to see it try to fulfill some upside activity to try to go above the 1059.25 high of the 30th. That would make leg D, and then I think we start to come down. And since it's matched the general market very well since the October 15th low, it made it slow back in the beginning of October, I would say the pattern right now is more favorable than negative. Here's the negative. So I was going to say to you, if you had two contracts, I would buy one right now, and if it took out 1040.5, I would add another contract, and I would take that second contract off or tighten the stop a lot the moment it breaks 1059.25. That's the high of the 30th. So I'm going to recommend, because you want to go short, let's hold off. Call me Tuesday. Let's give it a couple of days. We'll have a look at it again. I'm going to advise you not to go short right now, even if it pulls back a little bit, but I think it's got upside still to come. So is that okay?
That's fine. Thank you.
Thank you for calling, Lou. We'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 3, S&P's up 2 on this, the 7th day of November. So RL's Ralph Lauren, question to Dan, what we're looking at, this is leg E in the daily. I suspect acting very nicely. RL up at 173, up $1.68. I suspect it's going to retest the 175, maybe even the 177's level. Just really nice action. Good technicals in the daily. Weekly is okay. It's making that V-shaped pattern. That's why 175 is going to be so important. It made a 174.98 high back in the week of the 12th of September. So the support right now is really very good at 171 to 169. Okay, here we go. Steve asked me, wave count. Hi, Basil. Love the information you give every day. Would you please do wave count for PFE, that's Pfizer, on the daily? Thanks, Steve. Okay, Pfizer right here, PFE is in leg. It went to peak D. See, this is what I'm talking about. There are a number of these stocks that have gone to C, and now the pullback is a little bit deep, but not the end of the world, but it is deep. So I'm suspecting that there will be a leg D up. It doesn't have to be, because it's still way under the high of 30.84 made on the 19th of September. It's trading now at 29.75 0.88, down 17 cents. Holding the 9-period moving average. MACD's good, stochastic's up at 90%. I suspect that it has another little bit of a move to go, but then I'm going to be very cautious because I think the biotechs and the pharmaceuticals, I don't know about the medical devices area, how they fit in because of the legislation that's maybe going to be taken off. So in the meantime, I do see a further gain in Pfizer, but not that much. I think it'll go just above 30.44 and somewhere in the 30.40s. Hey, maybe it'll be a little higher than that. Maybe touches 30.70. Maybe it touches the recent high of 30.84. But I'm suspecting that there's going to be a repellent line right there. It's going to be real tough to get through. But the stochastic is at 90%, and I don't have a signal yet to say that it's in a sell signal. It's still in a buy mode, and we should see a D. So far, if you're long, stay long. If you're thinking of shorting, don't do it. Merck's exactly the same. Merck has made a peak C in the daily, pulling back just a little bit. I think you can go higher. Merck's a better chart pattern than Pfizer. Remember, I did this the other day. I said that huge cup formation going back to its all-time high at 61.62 back in 2007 that's being accomplished, and now there's a high-level consolidation, and it's close to either a diamond formation, which is not very good, or an oval formation in the, I'm going to go with the diamond for now. We'll put in the oval just for now to show what I was thinking, but more likely it's the diamond formation, and that diamond formation says, whoa, be careful when you get the sell signal because it could be quite deep. That's on Merck. So, and Pfizer was a question of Pfizer and Merck are kind of going together. Merck's the better pattern. They're both positive. As of now, I think I'm real close to getting some kind of, at least a stalling pattern formation. Next question, Carlos asked, hi Basil, question on what leg are we in on the XLE or the ERX? Is this close to a reversal or wait till next week to go short? Thanks, Carlos. So, Carlos, let me have a look. XLE. I think I did that the other day. Okay, yeah, I did it the other day. I had a peak D in the daily, right there. The XL is trading at 88.36, up $1.53. The monthly is given a major sell signal, and that candle is the really most of last month. Is just absolutely imperative to break above and to close in the next, I'd say in the next 3 weeks, somewhere in November by Thanksgiving or so. This has to be above 91.30 for the XLE to show recovery rather than a failing pattern. Weekly looks terrible. The monthly doesn't look great, but the daily looks quite nice. And so far, the rebound between yesterday and today didn't, wait a minute, isn't Rig in that? Didn't Rig say something other, Rig? Holy moly. Rig is only down 23 cents. I thought Rig came out, I just saw it go by. Unbelievably bad news. And there it is, just down 22 cents. I wouldn't be surprised if some of these guys are getting ready just at least for a bounce. Maybe it'll coincide with the dollar pulling back. Remember, dollar's in leg D, USD, JPY, the dollar-yen currency pair, which the two have been going together, is in leg D. I wouldn't be surprised if, actually, I responded to one of my subscribers saying, watch out, and I mentioned this to Tom last night when I was interviewed by Tom, that I think we have a transition week next week. I think some of the real strong winners are going to be taking a pretty good breather, while other laggards, even if they've been rallying, they're still the laggards, are going to be favorably met. We're in one of those, in one of the sectors. It's acting really nice, quietly, steadily, just the most amazing leg. It's not a single leg, it's only still a leg B or a C up, looking really good. And that's what I think is going to happen if you can transition into other areas. So now, look, and that's it. CVX has got the same pattern, and it's really a big weighting. So the answer, Carlos, is that the XLE is acting well. I don't think it's great. I think it's going to be coming down again. It's trying to test the 9-period moving average in the weekly chart. I don't have a signal yet in the daily, but I suspect, I can only say that if the XLE, the S&P Select Energy Spider ETF, can go to $89.50. It's at 88.36. It's $1.20 higher. Then the 200-period exponential moving average of 90.93 will become a magnet. My suspicion is that somewhere in there it'll start to fail. I'm really watching it real closely. But in the meantime, no signal yet. Hold off on shorting. I might be wrong, but that's what I'm saying. Julie wanted to know about the EEM and the transportation index. But first, I must go to Brent in Martinez, California. Brent, how are you?
I'm doing just great, Basil. How are you today?
I'm well, and I'm looking at one of your favorites. You wanted to look at?
Yeah, UNG. There's just a couple I was going to throw out there. We don't need to look at it, but something you might want to take a look at. Just, I know you like the round numbers. If you look at Rheingold Resource, it's not right now, but at some point, GOLD, I put in a round number low at $58.
That was the low. Wait. The low was 55.55.
Just recently, I put in a low at 58. I had $58. Maybe not.
Let me just quickly look at that because I always look for those round numbers. I don't see it in RGLD. Rheingold.
GOLD. Rheingold, GOLD.
Oh, gold stuff. There. Yes. Okay. Let's have a look at that one. Yeah, that looks like 58. That looks like, whoa! Thank you. And and there was another one that had
then obviously Baidu, which I sent you the email about. So.
Yeah, and that Baidu, you nailed that beautifully. Baidu, folks, had a 246 round number high at its all-time high. And 244 was the round number open. So that says it's real clear. You can go short the stock because if it gets anywhere above 246, at 246.01, I would even say 244. If it goes a penny above 244, you say, uh-oh, be careful, it's not yet ready to turn down. But this could be a signal. See, the only reason, the difference is the MACD is very strong still in Baidu, and yet it hasn't been able to have that little bounce that you would expect. But the stochastic's at 81%, and if you look at GOLD with its round number 58 low, you'll see that the stochastic went from about the single digits there down at 5.32, and it's now at 28. That is a big move. And you've got to see the same equivalent in a Baidu coming down and going to 65% in the stochastic. So there's still buying strength in Baidu. It hasn't come down yet, but it's one worth watching with a round number. So let's just go back. You want to go back to UNG?
Yeah, if you could, please. It seems very strong. It doesn't seem to be backing off too much.
Yeah, it's the stochastic's at 96%. The MACD is still climbing. It's in leg B. It looked like it was about to make a peak B, but no way. It wasn't interested. It made another new high. It stopped dead at the 200-period SMA. That's what most fund managers would be looking at. So it has pulled back away from the 23.45 level. And the weekly chart has that single leg A up. Now, only thing I can say is that this is the season for the heating oil and all that stuff. So therefore, I would suspect that the worst case is that something happens and UNG tests 2164 to 2123 moving average support levels. If it breaks 2212, which is the major 200-period moving average in the daily, but at the same time, the way the weekly technicals are having a very positive divergence tells me that there's a greater chance that this is not just a single leg A up in the weekly chart, but in fact, going into the third week of November to the fourth week of November, the Thanksgiving weekend period, I would be looking at UNG to see whether or not it has held the 21 to 22 area support. And in fact, if it's at 24, that would say, now be careful if you are trying to go short natural gas, because it looks like it wants to make a U-shaped pattern going towards the 25, 26 area. That's the way I would look at it as a long term. You got in beautifully, and I think that could be a core position. You could trade around it if you're even bothering to trade around it. I know there's sometimes you do like to do that, but that would be the area of major support for UNG, which is there. I didn't say what it was. It is United States Natural Gas Fund. It's become a really nice tradable. At one point, it was not there wasn't enough movement in it, or maybe it wasn't enough volume. Now it's just a regular old stock. It's doing very nicely as a trading vehicle. So you're in. I'd only look around trading it with quick trades, and that says that 2267 on the 200 period, 120 minute chart to about 2240 is really good support. And I don't know when that'll pull back, but it should pull back within the next 3 to 5 days. Let's see where it comes down to. And it's only in leg B in the daily. Nice.
That's what I thought.
Nice move. You already nailed this one beautifully. Congratulations.
Yeah, they're calling for some really cold weather next week, too. Should give it some support. So.
Yeah, I'm just upset that that it's moving so nicely. That says we've got cold weather coming. Oh, no.
Find out what you want to hear, Basil.
That's all I want to hear, but I'm pleased to hear that you're doing well. Hey, nice news. Have a great weekend.
Yeah, you too, Basil. It was great talking to you. Take care, and I always appreciate your help.
Thank you, Brad. Congratulations. So let me just turn around here and we go to Julie. So the EEM, we're just going in order here. EEM, the EEM is it's stuck. This is the emerging markets. I've heard so much talk about emerging markets. I haven't seen the evidence yet that it's got out of this rut from this last move down. I will see it if the EM trading at 41.18 is able to climb to the moment it goes above 42.50. Someone give me a yell, okay? I don't know. I don't know why it's not participating here because it had all the credentials, but it went to a peak D, doji high in the daily. It's pulled back. It's a reasonable pullback, fill a little bit of the gap. If on Tuesday it hasn't bounced to 41.61, I'm going to look at this and say, boy, you're just having the toughest of tough times. I'm sure it's because money is coming to the United States more than almost any other country. iShares Emerging Market Index Fund. So that's that. What was the other question there? Yeah, and the Transportation Index. Yeah, you got two questions in there. Very good. IYT, this is the IYT's only in leg B. It looks like the UNG chart. Even better because it's at all-time highs. Oh, it broke that resistance. You know, this mega bull market is just teaching anyone who's even tried to be bearish for more than just a short period a lesson. I don't know what it is. It's just an incredible thing. Look, it's just broken out. Well, the week hasn't finished. Let's see what happens by today at 4 o'clock. But so far, it is breaking out above this resistance inside track and channel line, and the stochastic is turning up nicely. The MACD is just crossing positive. The IYT still looks good so far. That tells me that if this is really a leg A, I can't make that decision until I get a peak and then the next leg. So all I can say is absolutely great action. It looks like it's an A in the weekly chart, but it's definitely B in the daily. Wow. That's really good. So let's go to the next question. The TRIN. Bob asked, TRIN is 0.6 this morning. Does that mean we should look for a big drop today? No. And remember, that's not the way I use it. I use it very specifically in the Chapman wave methodology. The low today was 0.58. No, it's not in the range that I talk about. So that would say that within 2 days, regardless of what kind of decline we have in between, there should be a very sharp move up in the futures. That's not going to happen. There's just two separate things completely. I only use the signal when I get it. Any other day, the markets could do whatever they want. It's just saying, if you think that it's going to be a sharp drop the next day, be careful if I get a flash of this particular index in this particular phase. Because it means something. That's all. But no, sorry, Bob, doesn't work. No, it's not even on my agenda for today so far. That's not a question on the market. Next one is Bob asked, NDX, has this topped? Okay, QQQ. Well, let me, that I didn't mean to do that. Ooh, wrong chart, wrong place. Go back. There we are. There's the break coming up. Wow, holy moly. Just one segment to go. What happened there? All right. I'll be back. I'll answer all those questions when we get back. VPAT and Technical Friday I was asked about. I'll get to it. I'll get to it before I do the next chart. Okay. We'll be back.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Moving up really nice to new recovery highs. Very, very good. Now, let's just do this. That was a question in the debt. So, IYT, the question was the V-shaped pattern. When you get a move like this weekly, where you go so much higher than the left side, 152 was a round number low, 156.28 on the 19th of September gave a lovely peaky decline. Could this be a leg F? Yeah, a leg F/A. Well, at this particular point, I really don't. All I can say is it's a fantastic move to the upside. It's very positive. I don't have any signals in the daily, so I don't have to think of the weekly. But the V-shaped pattern, that Groucho Marx eyebrows, unless you, well, I don't know if you can see this. I'll ask my engineer to do. Okay, you focus on this face over here, the face of the talker right now. What I do with my grandchildren is I do this. I do with the eyebrows. We do a whole bunch of things like this that, of course, I practiced diligently when I was in high school. I really got very, very high grades for being obstreperous. So that doesn't work. You want the eyebrows to be pretty much matching up, parallel. Horizontal. You don't want one way up above the other. So in this particular instance, what I'm looking at here is this absolutely looks like I have to analyze it in a different way as not a double top at all. Whereas if you go to the QQQs is a little close to maybe double top, but at this particular point it's still a little too high. It doesn't match that V pattern that really has a very nice, almost horizontal move. So that's the answer then. Answers both Bob and Chris's questions about it. Next thing is we've got, moving down quickly, GT says, DAX now down on the week. Is the rally over in global markets and therefore time for the S&P to go down? Nope, I do not have it. Next week I might have some kind of a signal, but I have to tell you, money is coming into our markets. And the RUT, the IWM, I think I'll have time for some of these. IWM, there are. That's got that Chapman wave, what I call the Look, those lines there. That's the falling axe pattern. It's almost like it's more like a falling axe than the usual flag pattern. And what that says is a break above. Anyway, at 116.29 will take you to 116.79 will take you above the 117.37 peak C high for leg D, and then we'll have to decide. Now, when it comes to the Groucho Marx eyebrows, you might get some kind of a pattern like it. Not really, actually, here in the weekly chart, but let's deal with that next week. So far, it's good action on the IWM, so I'm not yet close to a sell, signal. Maybe later next week I will be. Next thing, Sarah asks, how do you trade a market? Looks weak 1 minute, looks weak 1 minute and then strong the next. Intraday turnaround. Don't forget Nico and Paige coming up straight after me. I run out of time to say that. Should be a fabulous show as always with Nico and Paige. So let's go to the question is, how do you trade it? You've got to trade. Well, I use the Chapman wave methodology. And for instance, this will give me just a moment as we wrap up. Let me show you a trade that I missed, but a lot of my subscribers wrote me to say they took the trade. I had said right here that I do not want to buy a strong leg up here unless before it went to, I think this is the day, before ACI, Arch Coal, went to 237. If it didn't go to 237 but went down to 228, that's where we would buy it. Instead, it went just a little above, plunged down, went to the 228 level, and then closed well nicely high into the 240 area. Then it went all the way up, and now it's showing at 270. So I'm following this for those subscribers that actually took the trade, but I was very strict with my orders, and we didn't take the trade. And yet, you've got to do your homework, because that said, Arch Coal is exactly what we're looking at right now. It's a good candle. So, thank you for being, check my opening call out, and I'll be back Monday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TFNN.